Hey Domino's, I'm Dominique, and today we're going to be talking about how you can get $50,000 in business credit to grow your business, to even get it started. Because a lot of businesses, a lot of entrepreneurs are making a lot of the same mistakes when they're out here just getting started. So today, that's what we're going to dive in. Some of the most common mistakes that are being made, how you can build the right profile so that you can get more approvals, better rates, and better terms. This video is for you if you are a small business owner, if you're an entrepreneur, and if you are looking to get money to start or grow your business. Guys, this is a learning video. This is a learning channel. The Domino Effect is here for you. On this channel, we provide all kinds of free resources, tools, tricks, and the right lenders so that you can get approved. Want to know why I really made this video? It's because a lot of people, they want to get the money, right? Dominique, I need 10 grand, I need 50 grand, I need 20 grand. But you don't know what type of money that you actually qualify for. You don't know how much money you need. You don't even know what you would spend the money on. So in today's training, we're going to dive into the process and all of the right steps that you need to take so that you can build leverage and avoid a lot of the mistakes that I made and a lot of the mistakes that I see, a lot of the same, you guys doing a lot of the same things, okay? I'm Dominique. I've been in the alternative lending space since 2019, and since then I've helped businesses secure over 5 million in capital, and that continues to grow, and I want to help you. DFX is a financial literacy and funding platform dedicated to helping diverse founders establish their credibility, then matches those founders to funders even if denied by traditional banks. And here on the Domino Effect, we are dedicated to providing you with all kinds of free training, free courses, and resources and guides to get you started because you deserve to get funded. But guys, we got to be realists out here. Entrepreneurship literally changed my life, and it can do the same thing for you. So I want to help you get there. So you guys already know here. How can you help? Well, you can do me a favor and hit that like button, hit that subscribe button, watch this video, go ahead and share with your network if you get value from this training. So let's dive into it, guys. The first thing that you guys need to do is you have to be realistic. You got to understand the different types of business credit that's out there. Okay? There are all types of credit. And a lot of you come to me and you're like, I need money. I need money for my business. Okay. And then I ask you, okay, well, what do you need the money for? And the answer is, well, I don't know. I just need as much as I can get. I don't know what I need it for yet, but I just need it. Guys, that is the worst thing that you can say to a funder. It is a huge, huge, huge red flag. Also, that puts you in a really bad position. If you get the money and you don't have a plan for it, what is typically going to happen? Come on, think about it. You're probably going to spend it, okay? And you're not going to have it allocated, and you're not going to know, it's not going to be spent wisely in a way. So then remember, we talk about good debt versus bad debt, okay, you guys? Make a plan and work the plan. This is where having a business plan comes in handy. But how can you put together a plan that is going to help you budget, to help you look good on paper? We want to help you be attractive to credit issuers and lenders. If you don't know what you need the money for and how you're going to use it, then you don't know if you're going to need a net 30 account, if you're going to need a line of credit, if you're going to need just a vendor card, if you're going to need just a fleet card, if you're going to need a term loan or an SBA loan. So if you don't know what type of financing you need, it's going to be more difficult for you to get it, guys. Understand this piece. And we get a lot of questions about liquidating your cards, right? People need the cash now. That's something that we hear. But for a lot of people who are startups, or even my friends in real estate, guys, who need 30,000, 40,000, 50,000, 60,000, okay? You're getting business credit cards for that amount. But remember, if you liquidate it, you're going to be going through a process, okay? You're going to be paying fees. You might end up getting less. It's a process. You might end up even having to jump through hoops, okay? It's not overnight. And remember, your credit cards really are for purchases. So help build up your established business, help establish your business credit profile while you're making these purchases in your business. You guys, there is strategies to this. Honestly, this is where a lot of you guys are running into some trouble, because if you're trying to get 40, 50, 60, 70 grand, right? You need to make payments, or you need to do renovations, or you need to get supplies, or whatever that is. It's smarter, wiser to get a line of credit or even a term loan, right? So It just depends on your individual situation. Number two, biggest mistake is not knowing the types of lenders. And there are four categories to this, you guys. Now, let's start with number one. The first one is traditional bank financing. This can be a little bit harder to get. 80 to 85% of businesses cannot get funded through traditional banks. And we love working with women-owned businesses, veteran-owned businesses. Come on over here because we got a massive pool of private capital waiting for you. But banks, they tend to have stricter regulations. Now, the second type of lender are private lenders. You could work with a platform like ours, DFX, which is a funding platform. We provide financing for diverse entrepreneurs. Now, private lenders are really, really great, guys. When I stepped into the alternative finance industry in 2019, it was a huge game changer. I literally knew nothing that this even existed outside of the bank, okay? There are so many different other resources that are available to you when it comes to private capital, okay? We work with non-depository lenders, private investors, family offices, hedge funds, and other banks even, right? So guys, they're less restrictive. We're really able to provide some more customized packages, really able to look at your unique situation. So it's worth reaching out to and looking into. Some alternative lenders work really fast, but you got to be wise here because you can get caught up, and we'll get into that later, all right? I don't want to jump ahead. Now, the third one what we want to talk about is SBA. Now, SBAs are great. They tend to be a lot harder to get though, guys. But if you can get an SBA loan, you're looking at like a 10-year term with a really great interest rate. And we actually have some great programs for SBA Express, especially for women and vets. SBAs typically have their own, they're working with banks, and they typically have their own individual terms with who they're working with. Now, the next type of lender funding that you can work with are payment processors, merchant processors, guys. Things like PayPal, Square. You could use Stripe. I personally don't like Stripe, but you could use Stripe. PayPal, Square. These are merchant processors that you can use, and also they are able to provide funding for you once you build up history. So this could be one of the first places that you're messing up, guys. You're looking at the wrong type of lender. You need equipment, but you're looking at, a merchant cash advance, right? So that is not a matchup for you, okay? You have bad credit, but you're going to apply for, unsecured financing where they look at your credit score. So guys, make sure that you are being matched with the right type of lender that fits your unique situation. And when you work with a platform like DFX, we work with the top lenders in this space. All you need to do is schedule your one-to-one at plan.dominofxgroup.com. Now, you need to understand the difference between a lot of these things, right? The difference between a line of credit, the difference between a credit card, the difference between a charge card, and what that can do for you depending on where you're at in your business. These are revolving credit cards. These are revolving lines that you can use as you wish, okay? So you'll take the money out. Let's say you get approved for 50,000, you want to take out 20,000. You're going to take out the 20,000, you're going to use it as needed. You're going to pay it down, and then it's going to be accessible to you again. So a line of credit is excellent, right? It really helps a lot of businesses just grow and scale, okay? And guys, when you're talking about credit cards, you can get 10,000, 20,000, 80,000, up to 80,000. But is it really meant for you to just get it and just take the money off of it right away? No. And I want you to keep in mind, if you do decide to do that, you're going to be getting less either way because you're going to be paying fees and you're going to be jumping through hoops in order to get this done. If you need to make a purchase for equipment that's like 10 grand or 15 grand, you can use your card to do so, okay? You don't actually have to liquidate the card and use the cash to do that. You'll end up getting less, all right? So use your business credit, establish your business credit profile, while at the same time you're using these cards for their intended purpose and you're strategizing. Now, when we talk about charge cards, remember these cards, they can have high limits, but guys, sometimes they're due really, really quickly. So I would say read the terms. A lot of you are signing things and you don't see that the paperwork within the paperwork that you're going to have to make a payment within 30 days. Can you pay back $20,000 in 30 days? Can you flip this funding within 30 days? Was this in your plan? So, guys, think about this. You don't want to destroy your credit. You don't want to destroy your business credit. So, understanding the difference is the key to literally pushing you forward. And most businesses really like a line of credit because it's revolving and you can use it and then replenish it as you pay. All right, number 4. And whew, this one is a big one, guys. Documents, your financial documents. No matter where you are in your business, you need to have your documents together. When I first started my business, I didn't know this. I didn't have all of this together. I didn't have a mentor to guide me, okay? I literally had to learn through trial and error. So I'm helping you guys and I want you guys to know so you can get ahead of the game. But get your documents together. When you are looking for quick funding, fast funding, things like MCAs, they will provide short-term funding just based off of your bank statements and your cash flow. You need minimal time in business, 3 to 6 months even. Now, if you're going to be going for some larger funding, or if you are going to be applying through a bank even, and even with some private lenders, depending on the amount that you're requesting, you'll need to submit more documents, things like 2 to 3 years of your tax returns, P&Ls, you'll need to submit your balance sheet, even projections sometimes. Then when you're looking at your payment processors, they're basically looking at the activity on your account. So the reason that I'm breaking this down for you guys is because every lender is different. The 5th thing that you guys need to know, and the biggest mistake, is not anticipating the speed of funding. Depending on the type of funding that you're applying for, if you're going for something like an MCA, those go pretty quickly, right? Because they don't need a bunch of documentation. If you're going to be looking at something like that, you can get funded within a day. If you get everything in and everything looks good, you can get funded in a matter of hours even. When you're looking at other types of funding, like through SBA, be advised that those take longer. Sometimes they take months, guys. And even when you do an SBA Express deal, once we get the package out, it takes about 30 days to hear back, or less, but it takes about 30 days to hear back. So be advised, okay? Keep your expectations realistic. And also, you don't have to jump into anything too quickly. Don't feel pressured to make a decision right there on the spot. This is your business. Only you know what is best for you and where you're headed down the road. So don't feel pressured to jump into anything too quick, because that's how a lot of people end up in what we call a debt spiral, where they're taking on too many MCAs and they overextend themselves and then they have no other way to get out. Number 6 is the amount of funding. How much are you requesting? Do you know how much you need to get this off the ground? If you got an offer for $30,000, $40,000, or $50,000, what could you do with that? I could think of some things that I could do. I know you could think of some things that you could do in your business right now to get it off the ground. And if you could get it, would it help you today? Would you take advantage of that? Guys, you got to be thinking about this, because sometimes, real talk, some of you come to me with no cash flow, you got no revenue, you got no bad credit, okay, and you have no collateral, nothing, right? You're newly established and you're saying, I need $100,000. Dominique, give me $100,000 right now. I don't have a business plan. I don't even know if I got $100,000 what I'd use it on. I just know that I think I need $100,000 to get this idea of mine off the ground. Be realistic, okay? That's never going to happen. No matter what these gurus tell you online, it's not possible, okay? So just put yourself in that position. Would you do that? Would you lend your own money out to somebody that came to you and wouldn't basically give you any information and didn't give you any confidence that you would be able to get the money back? Be realistic about this. We have a lot of businesses that get funding at a lower amount and build that relationship. You'd be surprised. We've had clients that come in that could only get funded for 5,000, remained with us in the long term, and now they're up to like over $100,000 in funding. Okay, you guys, or more, depending on what they've done with the company. So there are tons of different examples that I can give you guys about this. But I hear all of you. I can hear all of you saying, yes, I know what I could do with that funding. So guys, put yourself in a position where the lenders and the credit issuers are chasing you. All right, next one is the rates. Guys, if you go to a bank, you're going to get a good rate. All right. Now, I always ask my clients when they come to us, have you been to the bank yet? Why? Because if you can get funded through a traditional bank, go there, right? They have better rates, they have better terms. But remember, unfortunately, most businesses cannot go there. They do not qualify. All right. So you guys Think about some of these things when you're asking about the interest rates and the terms. When you're looking at short-term unsecured financing, which is what an MCA is, right? An emerging cash advance, that is going to be higher. It's going to be a lot more expensive, and they're typically going to be a shorter term, but we'll get into that later. Guys, they're proving you quickly, fast, and you're not having to put up any collateral. So you're riskier to them. So it's going to be more expensive. Also, I want to tell you guys a little secret. When you're applying for some of these companies, if you're just randomly applying online, which is hurting a lot of your denials, okay, you don't want to be doing that. If you're randomly applying online, one thing you got to think about is some of these broker programs, why some of the cost is so expensive is because they're charging like an extra crazy points on the back end. Okay, you guys. So, hey, everybody's got to get paid for what they do, but it should be fair, right, guys? But they're asking for minimal things: bank statements, 3 to 6 months in business to get going. That's not that bad. And let me ask you this: can you get funded at your bank? What did they say? Okay, so it's either they probably said no, and now it's either go online and just apply. And when you do that, you run the risk of hitting hard inquiries on your personal credit. You just run the risk of running into this wall and getting frustrated and getting bogged down with all of these denials. So let's avoid that, okay? Now, when we're talking about like lines of credit and term loans, we actually work with a lot of lenders that are very similar to bank rates right now. It does depend on your individual profile and where you're at in your business. Guys, don't be afraid to crawl before you walk. Okay, that's just life. Why am I telling you this? Because I don't want you to be disillusioned or give up when you're going and you're expecting $100,000 and maybe you get approved for 10 or 15. Could you use that 10 or 15 today to get you going? And where else are you going to get it if everywhere else you've been said no? The reason that private lenders and payment processors and alternative finance is such a game changer is because it really steps in to fill the gap left over by all the denials from traditional banking. You can get this funding, you can flip it, you can multiply your profit, you can multiply your revenue, you can really take your business off to the next level. You can kick off that marketing campaign, you can get all of the supplies that you need so you can take on more jobs. You can get the equipment that you need. You can get the vehicles that you need to get going. It allows you a lot more flexibility. You do not have to use your own money to build your business. I think this is the biggest misconception, especially when it comes to underserved communities. They think I have to do this all on my own. You don't have to do it all on your own. All you have to do is just get yourself up to a point of where you qualify and then propel yourself forward. You can cut off years by doing it this way. So there's pros and cons to all of these when it comes to rates. You can go to the bank, which is where you're going to get really great rates. You can go to the SBA, which is where you're going to get really great rates as well. Just be advised, if you are going to be stepping over to the alternative side and you're looking for faster money, and if you don't qualify on the banking side, traditional side, then yes, you're going to be paying a little bit more of a higher interest rate. You guys need to make sure that you are being matched up to the right type of funder. I am seeing this happen all of the time, especially when you finally come to us and you've got 2, 3 MCAs. That's just not a good way to do it, and it really holds you back. So these are the strategies that you need to qualify. I'm seeing a lot of you go with the wrong lender, and I want to help you stop that. All right, 8, let's talk about terms. And we kind of touched on this. Private lenders, you're looking at shorter terms, especially if you're going to be doing like a short-term loan. You could be looking at 9 months. You could be looking at 12 months, 24, 36 months, depending on the type of loan that you sign up for. Do you know if you're going to take out a $100,000 loan and you decide you commit to paying that back within 9 months, do you know how much money that's going to be? Have you thought about it before you actually put your name on the dotted line? Have you done your budget and can you handle that? Is some money going to go to good use to where you're going to flip it? And we have a client, we did this. He has a $15.95 weekly payment. He took a $45,000 loan and already flipped it within a matter of weeks. All right, you guys, it's a medical billing company. So what can you do with the funding and with the terms, right? It depends on what you can do. SBA is going to give you terms of 10 years, maybe even 20 years. Banks have longer terms. We work with lenders that can do unsecured financing of 3, 5, and 7 years. So understand what you're reading, okay, when it comes to this and what you're going to be signing up for. Number 9 is your repayment schedule. I told you about my client that was able to make that $1,500 weekly payment, but we have other businesses that can't even do a $300 weekly payment. That's okay, you guys. Don't sign up for anything that you can't do, okay? One thing that I see a lot of businesses doing is signing up for things based on hope. I hope I can do this. Well, the plan is to do this. No, can you realistically put this in motion and make it happen, okay? Because when it doesn't happen, it just creates stress, okay? It just creates a big turmoil. And we don't want that to happen for you. So we have clients who can handle the weekly payments and we have some who can't. It really just matters what is your situation. Do not get bogged down with these daily payments or these weekly payments if you cannot handle it. Speak openly, ask for help, let the advisor know exactly what you need, exactly what you can and cannot do. Hey, look, this is not feasible for me. Don't sign up for anything. And you can build that relationship, remember? So we have other clients that started on a weekly payment, did well, and then moved themselves up to a monthly. And number 10, oh, this is a big one. Number 10, read your contracts, read your paperwork before you sign. Read, 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 read. If there is one thing that I could tell you and that I have learned from personal experience as well, read the paperwork. Not everybody has the best intentions when it comes to business. And for underserved businesses, a lot have been at risk for predatory lending, predatory loans. I would hate to see that happen for you. So make sure that you are reading the fine print that they're signing you up for. Read the terms, ask yourself, what can you use the funding for? Do you have a plan to put this in place? Then if you decide that this is an offer that you want to accept, typically at that point, there will be a hard inquiry on your account, on your personal credit report, and then you'll move forward with signing the documents and providing your routing number, your account number, and getting the funds. And here's a bonus, guys, when we talk about payment processors, stop leaving your money in things like Cash App and things like Zelle. Transfer those things over, okay? Make sure you're transferring your funds over, and you really want to make sure that you have a business bank account. All right, you guys, so let's recap. We talked about the types of lenders that you need to know about. We talked about their requirements. We talked about establishing business credit. We talked about the difference between lines of credit, between credit cards, between term loans, between charge cards. We talked about documentation. We talked about the speed of funding. We talked about expectations, realistic expectations. We talked about rates. We talked about terms, repayment schedules, and also how you really need to make sure that you are reading through the contract. Guys, I want you to make me a promise that you're going to be working on your business constantly so that you can reach your goals. There is nothing like commitment, consistency to help prepare you to the next step. You want to be strategizing so that you can access all of this funding. Don't apply for funding if you don't qualify. All you're doing is just shooting yourself in the foot. Get a mentor. And guys, if you need a mentor, I'm here for you. Come join the Domino Effect, come join the club. And I've helped businesses across the nation access funding. I've helped entrepreneurs with getting funding. Align yourself with people that are doing what you want to do or that are where you want to go. So that's it, guys. If you follow these steps, then you're on your way to have a fundable foundation. You're establishing a credible business that is making you attractive to credit issuers, lenders, and bankers. So guys, you know what it is. I need you to do two things. Go ahead and download your free step-by-step guide to help you get started with building your business credit. And the second thing, go ahead and schedule your one-on-one free funding planning session with myself or my team so that we can help you see what you qualify for right now. If you don't qualify, help you understand the next steps to help you get to that point a lot faster. Thanks guys for watching. I hope that you learned a lot from this free course. Here on the Domino Effect, it is my mission to provide you with the right resources, business tips, tricks, and tactics that you can use in order to get money for your business. Did you get value from this training? Then do me a favor. You know that YouTube algorithm. Hit that like button, hit that share button, and that subscribe so that I can continue to provide more free courses and trainings just like this one. See you next time.